Okay, I think we are good to go. Speaker. Okay. Awesome. Welcome. Like I said, it's been a pretty hectic week for me. I just said, you know what? I'm just not gonna trade this week. I'm going to let stuff go by. I'm gonna recover, get some more sleep, and come back next week, which is exactly what I did. I looked at the charts a bit, I think on Wednesday, but nothing enough to make me want to sit down and take a position. I kind of just wanted to use this week to rest, kind of let my body cool down, and yeah, kind of just recalibrate per se. So there are no charts today, but what we could do today is we can run through our pairs. We can give some outlooks for the next week or so, and then go from there. So we can go ahead and start off with EURUSD. I'm actually just going to clear everything. It's okay. Very interesting. I will say though, in between now and probably the end of the year, my goal is to reduce myself to two pairs only. And now, in terms of which, that's still like what I'm trying to decide. I think it's a pretty hard decision to decide which two assets you're going to want to trade for, a continuous amount of time. The only reason why I say that is because obviously pairs move differently through different in different years. For example, if we recall back to when RCV launched in COVID, we had that super impulsive move during. Let's see. Let me actually move back here. We had that big impulsive move after COVID, and then we had the big sell-off during after COVID, which was the year after that, or a year or two after that. So different pairs move differently in different years because there's obviously different market conditions. There's just different stuff going on. So to stick to two pairs only for an extended amount of time is a bit difficult. But I will say I probably won't choose a currency pair. And the reason why I say that is not because of the currency pair's movements, but because of what we had discussed. I think it's been like 2 months now since we've discussed this, but the whole pretty much how if you have a higher volatility asset, then you have smaller lots. And if you have smaller lots, you have smaller commission fees, and you could still realistically get the same quote unquote RR. So it could potentially minimize your risk, especially if there's some slippage involved. But yeah, for the most part, I do want to switch over solely to either an index and a commodity, or just two indexes. For example, it could just be SPX and NAS, or SPX and gold, or it could be SPX, NAS and gold, or it could just be NAS and gold. So it's pretty much that's kind of the dilemma that I'm going to try to solve between now and the end of the year. I'll probably start looking at NASDAQ probably start next week, and I probably won't be looking at EU for much longer, just because of where we are going from a directional standpoint. So I have a question for you guys. Just by looking at this chart, where do you guys think this is going to go from a longer term? We're on the daily time frame. Where do you guys think? Just say up or down. Because this can really only go in two directions. So it's either up or down. What do you guys think? Down, 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 down. Interesting. Oh, sorry.
Sorry.
I don't know why that happened. Okay, my bad. Anyways, down, down, up, down, 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 down. I would say up. Yeah, it's a bit confusing, but I personally want to say up. The reason why I want to say up is, let's see, if we're on a weekly, technically from a trend POV, we are currently going up. We are up, and we have not caused any type of internal structural disruption, meaning that I cannot be bearish. I'm sorry, we cannot be bearish externally. Now, let's say this rally from COVID would have came in and taken out this, what is this, a 2018 high. That 2018 high then creates a new low. Okay, now we have structural disruption, and then now I can favor the bearish bias. right? So from a super long term POV, I am still technically bullish until either this breaks or we have a high be broken and then a low be broken after that, because that would be structural disruption, right? So for now, I do kind of want to favor the upside, especially, right, if we begin to zoom in. Let's go here. If we begin to zoom in, let's say a 3 day, right? This is just a very typical pattern that I've seen over the past couple of weeks, um, where traditionally you see liquidity be swept and then you go in the opposite direction. But something that I've been noticing, especially over this quarter, I would say, even last quarter as well, is that whenever I see two types of lows or types of highs give some type of structure, and then we give the sweep, then realistically from there we give the opposite move. Why is that? Because you kind of generate liquidity, take liquidity, and that liquidity is then fuel to go to the opposite direction, which is essentially what a schematic is, right? Um, and it's something that I've been seeing very very often. And if we see some today, I'll point it out again to you guys. But for now, especially with how the movement has been going for EURUSD, because I don't know if you guys remember, I believe this was like 3 or 4 weeks ago when we had talked about potentially, I think it was here, where we had kind of anticipated this to kind of just roll over, give us that move into the downside. I think it was around here. I don't know if you guys recall, but I sent the chart in the group and we reviewed it in one of the calls. Um, but I was pretty much anticipating for this to kind of just roll over, give us this new low, and then from there give us a brand new low. But since then, price action has been a bit choppy, because, for example, here, this is actually a prime example of what I just talked about here, where we have generate some type of lows, solidify the lows. Both are obviously solidified. We sweep the liquidity, and then we go for the opposite direction. It's just something I've been noticing a lot. Um, but because that has happened here, we took out the liquidity and then we broke a high, then that is technically in favor of this internal trend, even though technically this is bearish, bearish, but this is a pullback high of the external bearish, and that external bearish has now solidified, right, causing unwillingness. So realistically, we kind of are looking at something to go up, not necessarily down. So as of right now, I'm kind of favoring that bullish bias. I really think, especially after the sign of unwillingness, the break of structure, then realistically for a super long-term POV, we should be looking at least here. Um, and maybe it could take, I don't know, a couple of months maybe. Yeah, it should take probably to the end of the year. This is last year's December high. Yeah, this would probably take maybe until Q4 of this year. But for now, I am technically bullish. Next, easy one. This one still bullish. Nothing we can argue here. There's nothing we can argue in terms of why this should be bearish. If anything, whenever I'm looking at something that trends a lot, then I'm really looking for that sweep model to kind of play out, which is essentially if we are in a bullish trend, we create some type of liquidity, we sweep, but obviously internally this has to be bearish, right? But from there we have a conversion, which then gives us the entry to then go higher. That's essentially what a sweep model is. Um, Pretty much look for an unsubstantial new low and then an internal transition, and then you get your entry. It's kind of the basis of that. So within a trending market, you kind of do see that very often. Um, Maybe not necessarily from this time frame, but I think I recall Wednesday, because that was the only day I was actually looking at the chart. Yeah, Wednesday during session, right, where we see an external bullish trend. We do see the continuation break of structure, but this is an unsubstantial new low. That unsubstantial new low, right? Obviously, internally, you have to be bearish in order to achieve that sweep of liquidity. So internally here, this has to be bearish. So whenever we see this, essentially give an internal reaction, which would be the pullback of high, low retracement. It should still continue lower. But once that fails and breaks, you now have your entry, and that's kind of like a sweep model in play. This is the only thing I saw this week. I just saw this a bit late. But that sweep model is very, very common within these trending markets, just because if you're continuing the trend, if you wait for some type of liquidity, then that means that that is a transition. And if a transition occurs there, then that is where a new move begins. So we want to catch the beginning of moves. We don't want to try to chase moves, if that makes sense. Um, but from there, it's been pretty messy and choppy. But even today, you see the sweep. Like you could even, I'm sure this happened today as well. I have no idea. But if we're looking at this from the sweep, zoom in, do we have an internal transition? Sure we do. Obviously internally from a high into a low, we have to be bearish, right? So we have a pullback, failed reaction, that reaction breaks, and then wherever you want to take your entry, that to move up. Or if you don't see an entry here, you can obviously use the entire sell to buy here, and that is also a movement to the upside, and there's also continuations here. So even today you see this happen. So within these trending markets, there's more than likely a chance that you're going to see a sweep model kind of play out like this. But in terms of biases, this is still bullish, man. Like you just can't argue against it, right? Doesn't matter how long the pullback is, doesn't matter how sharp the pullback is, how sharp the pullback is, how deep, it still continues higher. And we have to anticipate that as so until obviously it isn't. So nothing in terms of there. Gold. Okay. Let's see. Gold. Obviously from a macro, still very bullish. But if this is to continue to be bullish, the only thing I can anticipate is for this recent high to be taken. If this recent high is to be taken substantially, then I can agree that this will continue higher. But right now, I just cannot argue, like I said, with EURUSD, I cannot argue that this is going to be bearish in any way whatsoever, solely because the direction is bullish, right? We've already had an unsubstantial new high. You can see the internal breaks, the internal order flow. You can see here the internal structural disruption potentially, but that structural disruption failed to break a substantial low. And then once we have the sign of unwillingness, which is from here, then breaking here, that unwillingness gives us the bullish bias. So for now, it looks like we have just tapped from a previous high, and this is probably just going to continue into at least here, probably much higher. You're in a gold buy? Yeah, I'm very confident this one will probably continue higher. But yeah, definitely I'm still considering whether this one is actually worth keeping for the longer term, just because the price action is good, but I have noticed that it doesn't really respect much of the how do I say this? Much of the like the timings of everything. For example, I do see a lot of moves happen during Asia. For example, there's a very big Asian move here, but not necessarily there. Here's where I saw a move come up in Asia, a move come up in Asia. There's actually some decent order flow here, potential entry here. And we're not necessarily taking out session liquidity before we are going up higher. Not that that's like the biggest confirmation that I use, but it's something that I know just because it is liquidity, it is more fuel. But there are a lot of times where you see movements during Asia, and I kind of don't like that because like I don't want to be on the charts at 9 p.m. Like 9 p.m. is pretty much right after I'm done with everything in terms of work, working out, um, chores, etc. And I'm kind of just trying to cool down, and I don't want to have some type of FOMO that need to be on the charts. I need to be looking at the charts, right? Um, but yeah, for the most part, I'm still deciding. It might end up just being like Nas SPX, and then occasionally look at gold. Maybe use gold as like an intraday type of pair, and just look at this from a M15 plus. So who knows? I did see Yeah, that you're in that gold buy. Yeah, I think you were in this gold buy here. If I'm not mistaken, this is the gold buy you're in. Very, very good trade. I will say very, very good trade. And it's cool because if you're looking at this from the external POV, then your realistic entry should be here. If you're looking at the session TP, it could probably reach here though. It might take a bit longer to go up there, especially because it's Friday. It looks like we might close soon. So if I were you and you're waiting for these TPs, I would just trail the stop, man. You already have the break and then a new high. Just trail the stop. You're already maybe at a 3 to 1 ish. So yeah, definitely manage that right. It is a Friday. Um, but from there, let's see. We do have a case study. Okay. So this is the entire position. Conservative target. No, this is fine. This is fine. I would say this is. I wouldn't even note this as conservative. I would say appropriate. I would say this is the appropriate target because you're looking at an internal transition, external target always, right? Whereas if you're looking at an internal transition here, then your invalidation has to be here, and then now you can aim for here, right? So if you're looking at this internal transition but looking for the external target of the external position, then that is more so aggressive. But yeah, I would say appropriate, not conservative. I would say that's more appropriate. But yeah, if you were to say conservative, then I would say entry TP. That's conservative because you're securing maybe a 1 to 2, 1 to 3 max, and you're looking at right maybe what is this M15? Right, you're looking at scalp slash micro transition into scalp TP. So. But overall, very good. Um, Internal CBOS, structural disruption, yes, because you have the reaction into the new high that creates a structural range to play off of. So yeah, very good, very good. Let's see, invalidation 1. My invalidation would have moved here. And then yes, probably here if we are like here when I'm very close to the TP, just trail it. Yeah, you could play this 100% off of the SD. Oh, the CBOS? No. No, no, no. No. I wouldn't, like, in terms of sell here, no. I wouldn't sell here. Do you guys know why I wouldn't sell here? If it's yeah, exactly, exactly. Right, we already had the reaction in play. So once this is an LG, internally this is bullish. So if I want to be bearish, I need a transition here. It doesn't invalidate the range. It just adds a layer of confirmation that I need to take the position. Um, hmm. But yeah, very good entry. Very good entry. Um, it really just depends on the, yeah, let's see. It really just depends on the position itself. Because yes, this makes sense. Yeah, I was gonna say it makes sense with indexes. 100% it makes sense with indexes, which is something I was thinking about today. Because of that position that I just showed y'all with this one on, I think it was on Wednesday. Where is it? Here, maybe, nope. Wednesday, here. Because of this position that I was talking about, I don't know if this is the one you're showing. But it really just depends now on the scenario and the asset. For example, my TP for the transition, right? Let's say I was conservative. Let's say I was very conservative and I took my TP there, I mean my entry and then my asset at the invalidation, right? My TP technically is a 1-2, but I'm withholding myself of, right, a lot more of a move because of that rule. But this rule can only be really broken for this pair because this asset, because this asset is religiously bullish, right? Like there is an external trend following that. So when it comes to that, right, for example here, I think it just depends on whether you are aware of the external direction. And if you're aware of the external direction, then by all means draw your stop. And now the only costs are going to be one, more chart time, two, swap fees, three, probably looking at what else? Maybe spread. It depends. It depends on what you're trading on, right? But maybe spread could screw you over. Um, but yeah, it would have made sense for this scenario, right? Yeah, even here I can see this. Yeah, this was today. I think this was today. Yeah, see, so if you are aware of the external anything, whether it's POI direction, maybe target, then it makes sense to try your stop, right? No, no, no. I wouldn't say it's greed. I wouldn't say it's greed. Um, I would say it's greed if you are not aware of the external. Because external is relative, right? Like external can be here, but then the external of that could be super bullish, you know? So if you're aware of the externals, whether it's level one, two, or even beyond that, then that's how you hold a position longer. Because that's essentially what we were doing, what, 2, 3 years ago? Right, scalp position on a swing POI, looking for the swing TP on that scalp entry. So it's not greedy, but I will say it requires more skill. Cool. Okay, so do we have any more questions, concerns, any case studies? I do have some stuff I've been working on for the group. Really, it's supposed situation dependent too. Like whatever lifestyle you lead will determine what you can and can't do in terms of chart time. Yeah, true. And you also don't want to be managing positions on your phone. I don't think that's the best thing to do either. But yeah, I am working on a couple of things. Definitely give me like probably like the rest of this month, and I should have everything ready to go. Um, but yeah, other than that, unless you guys have any questions, case studies, today could be a bit of a quick one. Okay, last one. Good. Cool, man. No worries. Have a great weekend. Um, I wouldn't say it's an LGC. This is more of a. I mean, actually, yes, you can consider an LGC because the transition already happened. So this is bearish, bearish. Yes, once you have an LG, that is a CBOS. So once you have a CBOS, then let's see the external again. No, I wouldn't consider it SD. I would consider maybe a structural disruption here, just because you're bearish and you're buying. If you're bearish, then how can it be an LGC? So yeah, SD. So not a big problem. But yeah, more of an SD. That's not a problem though. You still understood the model in play. So the model is in play. And yeah, you have to put your SL here. You have to, especially because there's no clear POI here. Nothing real clear to play off of. A lot of wicks. But yeah, overall very good. See, this here, LGC, because there is previous bullish, continuation bullish. Switch on GU. No, yeah, no. I wouldn't. I would still consider that maybe a bit of a force because I do see what you're saying. You're saying the structural disruption here is the model, and then there is obviously an LG after that. So yeah, it could be. It could be. But either way, I wouldn't say anything is wrong here per se. I wouldn't say anything is wrong. Let's see. Okay, so for one, I don't like how wide your chart is. I would widen it less. Just because this looks like a consolidation, I can't really read the structure. Like, let me show you what I mean by that. It's a big pet peeve I have. Like your chart. Let me find a range. Maybe not here. Like if I'm here, right? I can clearly read when structure is broken, blah blah blah. But if I go like this, and I go like this, then it makes it really hard to know where the breaks are occurring. Yes, I could still see them, but they're a lot harder to see, a lot harder to know. They're a lot worse on the eyes. So I would say for one, widen your chart, get more info on your chart, just to make things a little bit more clear. For one, two, bullish. This is post news as well. This is like Asia session, no? Or is this New York? But either way, solidified. Yep, solidified, no man's land. So now, pretty much any position here, you're guessing. Because you can justify both sides. If we have both sides unwillingness, we can justify both directions, right? Maybe there's a liquidity or a break. There's a buy to sell here. We can sell based on that. But at the same time, I could also probably take the, actually this doesn't take the liquidity, but you see what I mean? Like it's very hard to know if this took the liquidity or not just because of how wide the chart is. But yeah, no man's land there and there. I actually can't justify the bearish, sorry. Okay, yeah, I didn't. I can't justify the bearish move. The bullish move here, sorry. Because the only bullish move I can justify is waiting for here. But yeah, no, there's no position here. This is no man's land. Cool. Cool. Yeah, definitely. Yeah, yeah, yeah. I mean, you could do it on anything, whether it's iPad or whatever. Just go right and go down. Just try to see more of the chart so you can see more of the movements. Okay, LGC position go right. Because then if I'm like this and like this, it's a little bit harder to see everything. I don't know. It's hard to explain. I don't even know how to properly explain that. But it's a big thing I've noted, and I know a lot of people have caught on to it, where you kind of want to widen the chart a bit. But I suck at explaining this. I don't know why. Like it's a little thing, but it actually makes a pretty decent difference. How's the fund going? No, it's no long. It's not a fund, bro. It's not a fund. For more details on that, you kind of want to speak to Alex, but it's going well. I think there's like two more avenues that have been added. But yeah, Alex handles most of that stuff. That's why he's not really on the calls anymore. But yeah, it's not a fund. Cool. Any more questions? Any more case studies that we should review? Yeah, just message Alex for that for sure. He can get you everything on there. But yeah, he's definitely working on some cool stuff over there. Cask investment. Yeah, that's definitely. I think that's more down the line a bit. Still not. That's still not fully integrated just yet. But yeah, definitely just message Alex for more information on that. He'll probably come out and give some more information here in the next couple of weeks too. Cool. Any more questions, concerns before we wrap this one up? Cool. Yeah, definitely stay tuned. I am working on a lot of things here for RCV in terms of the brand and as well as the YouTube. And the goal is to kind of come away from the website, and I have like a new solution in place. So definitely stay tuned for that. Give me like a month or so, and we should be ready to go on that. And from there, it should make everything kind of easier on me and also cheaper for you all. So um, definitely stay tuned for that. But other than that, thank you guys for hopping on, and I will see you on next week.